Good day, Miss Jennifer. I am Angela Cordova, and this is assignment number one under BA 224, which is good governance. So, the first questions we have six questions. First question is, what is a corporation? Who are the stakeholders of a corporation? Define each and explain why are they considered stakeholders. Examples of direct stakeholders from indirect stakeholders and explain. Duties of board directors. What are those purpose of a corporation and differentiate multinational versus transnational corporation and give examples. So let's first start with what is a corporation. So, by definition, a corporation is an artificial being created by operation of law, having the right of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. So, that is from the Revised Corporation Code of the Philippines under Section 2. So, basically, a corporation is an artificial being created by the operation of law with the right of succession and the powers, attributes, and properties. So it means that corporation is something that is another being from its owner or from another being from its incorporator. So if tao pa siya, lahi if ever I'm gonna tukod a business, lahi ko and then lahi pod nga entity or nga being ang ako ang business. And for the who are the stakeholders for a corporation, define each and explain why are they considered stakeholders. Okay. So for the questions, who are the stakeholders of a corporation? So let's first define what is a stakeholder. So a stakeholder are individuals, parties, or organization with a vested interest in the success and performance of a corporation. Stakeholders can also be referred to as the parties which might gain or lose something from the decisions of a corporation. These stakeholders can be essentially classified as either internal or external. Internal stakeholders are those who are directly involved in the corporation's operations and administrations, whereas external stakeholders are those who are indirectly affected by the corporation's actions. So, under the internal stakeholders, we have the owners and shareholders, board of directors, employees, and the management. And for the external stakeholders, we have the customer, supplier, community, government, and the public. So let's first discuss what is the difference between the internal stakeholders and the external stakeholders. So for the internal stakeholders, we have the owners and shareholders, board of directors, employees, and then management. So these people are considered as stakeholders because these are the individuals or organization that own a portion of the corporation stock, shareholders that invest in a company with the expectation of obtaining dividends or an appreciation in the value of their stock. So that is for the owners and shareholders. And for the board of directors, these are a group of shareholder elected to oversee the corporation's administration. And for the employees are the foundation of any business. They are the individuals responsible for carrying out the day-to-day tasks necessary to keep the organization running smoothly. And for the management, we have here is accountable for the day-to-day operations of the organization, and they are responsible for implementing the board of directors strategic direction and ensuring the corporations operates efficiently and effectively. So for the external stakeholders, we have the customers, suppliers, government, community, the public. And for the customers, they are stakeholders because customers are the individuals or organization that purchase the corporation's products or services. And for the suppliers are the individuals or organization that provide the corporation with products or services. For the government regulates corporation and establish the legal framework within which they operate. And for the community refers to the geographic region in which the business operates. And for the public has an interest in corporation because they provide citizens with essentials such as products, services, employment, and tax revenue for public programs. So going back with the question, Why are they considered stakeholders? Because from the meaning itself, stakeholders are individuals or parties or organization with a vested interest in the success of the performance of the corporation. So basically, ang internal stakeholders, those people are who operates a corporation, and for external stakeholders, those employees, those people or organizations that who buy from the corporation. So basically, those people are the people who make or is the lifeline of a corporation. So, for question number three, examples of direct stakeholders from indirect stakeholders and explain. So, direct is another word for internal, and for the indirect is also another term for the external. So we're going to go back with the internal stakeholders. We have the owners and shareholders. We have the board of directors, employees, and the management. And for the external or the indirect stakeholders, we have the customers, the suppliers, the government, and the community, and also the public. So for the owners and shareholders, these are the individuals or organizations that own a portion of the corporation stock. For the board of directors, under the direct stakeholders or the board of directors, is a group of shareholders elected to oversee the corporation's administration. And for the employees, are the foundation of any business. They are the individuals responsible for carrying out the day-to-day tasks necessary to keep the organizations running smoothly. For the management, under the direct stakeholders, are concerned with ensuring the corporation operates efficiently and effectively. Management is also concerned with ensuring that the business operates properly. So additionally, they may be interested in the maintaining positive relationship with stakeholders and such as customers, suppliers, and the community. And for the external stakeholders, which are also the indirect stakeholders, with the customer, supplier, government, community, and the public. For the customers are the individual or organizations that purchase from the corporation's products or services. And for the suppliers, we have that individuals or organizations that provide the corporation with products or services. The government are regulate or regulates corporations and establish the legal framework within which they operate. And for the community, this refers to the geographic region in which the business operates. The community is interested in the impact of the corporation on the local economy, including employment opportunities, taxes paid, and local revenues. And for the public, has an interest in corporations because they provide citizens with essentials such as products, services, employment, and tax revenue for public programs. So let's continue with number four. So, duties of a board of directors. Let's first define what is a board of directors. A board of directors is a body of elected or appointed by shareholders who jointly oversee the activities and the overall managerial and operational aspect of the corporation. So, ang duty din ng board of directors are authority and responsibility are the most important is that the most important responsibility of the board of directors is to protect the resources entrusted to them by the shareholders and make sure that the latter receive a decent return on their investment. So for the board of directors, it is a top governing authority within the management structure of any publicly listed company. It is the board's jobs to select, evaluate, and approve appropriate compensation for the company's chief executive officer, which is the CEO, and assess the attractiveness, dividend payment scheme and its amount, recommended stock splits, reports, and other financial highlights, and recommended on in some instances discourage acquisition and mergers. So basically, the duty of a board of director is to protect shareholder rights. And for what are the purpose of a corporation? So several purpose of a corporation is profit generation, job creation, provision of vital goods and services, and giving back to the society. You also have innovate and drive progress and promotion of economic growth. For the profit generation, the primary objective of for-profit corporation is to maximize shareholder value and generate revenue for stakeholders. And for job creation, by creating employment, corporations plays an essential role in the economy. They provide employment opportunities to individuals who can generate a stable income and contribute to the company's growth. And for provision of vital goods and services, the provision of products and services to customers is another fundamental function of a corporation. The products and services they provide make customers' lives more convenient and comfortable by satisfying their needs and desires. For giving back to the society, numerous corporations recognize the significance of giving back to the society and have a corporate social responsibility, which is the CSR initiatives in existence. These programs are concentrated in fostering social and environmental sustainability, assisting the local communities, and confronting social issues. And for innovate and drive progress, corporations play a vital role in advancing innovation and progress. They invest in research and development to create changing technologies, products, and services. By introducing new products and services, business can also stimulate competition, which can lead to the development of superior products for customers, and corporations can also contribute to advancement in disciplines such as medicine, energy, and transportation, which can result in significant social progress. And for the last one is that promotion of economic growth. By generating revenue, creating employment, and investing in research and development or R&D, business can contribute to economic growth in their local communities and beyond. In addition, they can contribute to the advancement of infrastructure and technology, which can benefit the entire society. Further, corporation can foster international trade and investment, which can result in increased economic activity and job creation. And for the last question, differentiate the multinational and transnational corporation and give examples. So for the last question, multinational corporations operate in multiple countries with each subsidiary acting as a separate entity. They adapt their products and strategies to each local market, let's say the Coca-Cola. And for the transnational corporation, operates globally as a unified entity with centralized decision making and shared resources across borders. They integrate operations on a global scale. Let's say the Toyota. And another definition is that multinational corporations are those corporations who adapt on the culture and the preference of a country. Let's say for McDonald's, they adjust on Western countries. Let's say they offer something that is more on the reference or preference of the Western people and different and from the Asian people. And for the transnational, let's say the Toyota, they give the same products to each and every country that they provide their services or products. So dili magkalahi-lahi. For the national, multinational, lahi ilang offerings sa lain-lain nga country. And for the transnational is that isa ra gyud nilang offering mapaon sa panang nga country.